Hello, everyone, and welcome to the weekly roundup. Today, Ben will be giving us insights from all the elections, other macroeconomic news, and what we expect next week. Hello, Ben.
Hi, how's it going today?
Great.
Excellent.
Okay, let's go right into it. It was an exciting week. Let's start off with elections. So we have France, we have the UK, and we have the US race to the White House.
Yes.
Anything noteworthy?
Oh, for sure, plenty. I think the general message is people want change. 'Cause in France, obviously, Macron called a snap election, which surprised the markets and the world a few weeks ago, and that's biting him in the butt here. It looks like everything's moving pretty hard to the right. Initially, it looked like it'd potentially be a majority on the right, but I think the second votes are this weekend, so we'll see how that plays out. So that's pretty big change for France because it's a pretty socialist country. And if you get start to move more with capital restraints and higher interest rates and things like that, less holidays, pretty big change for France. And then the inverse happened in the UK, where we've everything's moving towards the left, and conservatives are out. So you're getting the opposite change there. So we'll see. It's probably reasonably good for the British economy. So we'll see how that plays out. As for the US, uh, um, it's really been up and down. I've read a fair amount on it, and it seems like there's a lot of people putting pressure on Biden to continue in the race. But at the same time, you're seeing kind of messages behind the scenes where I think on one of the dailies this week, I put out the chart of Kamala Harris like popping up to the same level as Biden as a potential presidential candidate. So that could be material. I think um, that might happen actually. A week ago, if you'd asked me, I would have said no way. But generally, how it's played out with Biden this week, it hasn't been super positive for him. So, I think ultimately it's not going to matter because it looks like there's a lot of attention towards Trump right now. And so ultimately, I don't think it'd matter. The last thing I saw from that one before we just move on is that Robert Kennedy Jr., who's wanted to run as an independent, has some slight rumblings that he'd take on the leadership of the Democratic Party if they asked him. So yeah, lots going on there, but it looks like Trump's got a pretty big lead right now.
Okay.
Yeah.
Um, Digital currency and crypto were in the news a bit this week, from considerations at the Swiss bank to enhanced reporting. Any insights on this?
Yeah, so lots continues on that side. The banks are looking at the digital currencies. Swiss Central Bank is very interesting, right? Because they're one of the most secure banking systems in the world. So if they chose to go down that route, what would they do? I mean, they're using a bunch of different blockchains. I believe they're using Ethereum to run their tests, but I guess we'll see more details on that. Regulation, I think, is great ultimately because that's really what the crypto market needs in order for it to become mainstream. I still have lots of questions with people and clients just about what is it? How do you use it? What does it mean? And so regulation's probably a good thing. There's some, I guess, anarchists that don't really like it in that direction with regulation because they want to have independence. But if you want it to be mainstream and be able to use everywhere and anywhere, give you that kind of gold like in a digital form, I think it's probably a good thing. The last thing, there's been a bit of a correction in Bitcoin last week or so. There was in the early days, there was a company called Mount Gox where a bunch of coins disappeared. Um, and they've done a big recovery. There was a bankruptcy, and now it looks like there is going to be a settlement with the creditors. And so there's a fear that once the creditors get the coins, they're going to dump them in the market. And It is something like 0.68% of the overall Bitcoin market, which isn't material, but you've seen some other kind of knock-on effects too with the German central bank. They own Bitcoin, not central bank, excuse me, German government. And so they've moved to a few hundred coins to sell. So there's kind of this fear that's built a bit in the Bitcoin market in the past week and a half. So we've seen a bit of a price correction, but I don't think overly material. So yeah, plenty going on in the again the blockchain crypto space this week.
In the corporate space, any earnings releases?
So nothing super material this week that I saw. We had a few things last week, as I noted in our call, but this week pretty quiet. This week, obviously, U.S. markets closed yesterday. Canadian markets closed Monday.
Mhm.
Wednesday was a short trading day for the U.S. As well, and so no, pretty quiet. Monday was a bit of a surprise. Just the markets were a little bit more volatile when Canada was closed. But earnings wise, no, it was a quiet week. Next week we'll get going again.
Okay.
Yeah.
Any portfolio changes?
So no changes this week. We're continuing to look at cleaning up holdings and a little bit more structure with some of the holdings that we have. So, over the years, you accumulate some individual positions, so many doing tax changes, and so continue to work through that and make sure everything's aligned. But no material changes. I think there's a lot of opportunities out there, but no material changes this week to update on.
Great. Okay, let's go to the charts.
Charts. Okay, let's see. I kept in my limit this week.
Good for you.
Okay. So David Rosenberg. So David Rosenberg's a great follow. Not everybody likes him, but I'd say one of the best economists that I've seen around. He certainly knows the data and the information very strongly. He's most noted for calling the bear market of 2008 when he was with Merrill Lynch. And he writes a great paper, but always puts out good charts worth thinking about. So this is the ISM Composite PMI. So Purchaser Manager Index. And so of note, of course, is this decline, but also this multi-level decline to new levels. Historically, as I've mentioned over time, 50 is kind of a significant level. Excuse me. And when you drop below that level, it tends to signal bad things happening, recessions, credit issues, some type of event tends to happen in that backdrop. And so he posted there that we've retouched those levels as well. He also did talk a little bit about the employment numbers, which came out today in both Canada and the US. And employment numbers have been contracting in the US for 36 months. Again, that's a pretty material number. That when you get a trending number that's longer than 3 years, again, that's not positive for what's happening with the economy. So interesting employment and PMI numbers starting to roll over there. So Bitcoin S&P. So this game of trades, interesting follow, good research. Tends to talk about crypto, but this is crypto versus the S&P, and so points out to a couple of periods where we've get this divergence. And as I noted in the earlier talk, just about this divergence we're seeing with some things happening with Bitcoin right now. My view is we play catch up as well. So we've had this correction into an upward trend with the S&P. So we look over these past historic periods, you get a catch up where you start to see the price start to pick up. So I'd be continuing to believe that that's how things play out. Lots of attention as well goes towards how can the U.S. government continue to finance their debt. And lots of fear about China selling their U.S. treasuries to stimulate their economy, stimulate the markets, protect the real estate market, many things like this. So I thought this was a great chart to just kind of point out who owns treasuries. And there's 30 trillion of them around the world, we'll say. And of this area, it's good to look at. So this is euro in red. This is euro area buying treasuries, and then you look at Hong Kong and China in blue. And so, as you know, we started a couple years ago up around 1.5 trillion, and they've been selling. I'd say they haven't been necessarily selling. In some cases, they have to support their currency and market. In other cases, they've been buying assets elsewhere, buying businesses in certain parts of the world using the US dollar to do so. So you've actually seen their number drop materially to just under $1 trillion, where the other euro area continues to be buyers of US treasuries. And it's really the US dollar uh, control of the world because they still control 85 to 90% of all daily transactions happen to US dollar. Ultimately, it's going to be chipped away at. But because of that, the countries in Europe need to buy US dollars. And so we've seen that pop up here. That's it for the charts today.
Great, great. What's on the agenda for next week?
So I'd say the biggest thing that we saw happen today was jobs in Canada and the US. And so that jobless number in the US ticked up to 4.1%. And so the US is weird with how they record the jobs is once you're out of the workforce, you're not included in the tally. Also, they have multiple jobs count as multiple jobs instead of part-time jobs. So that's why the number's so low. Historically, it's lower than most places in the world. In Canada, it ticked up to 6.4%. If you look at the breakdown of the jobs numbers in Canada, it would be something in the neighborhood of 7% full-time jobs lost for the month over month. And any of the gains happened in the part-time area. So the quality is not good and continues to be trending in the wrong direction. So yeah, as we came into this week, the view was kind of a 40% chance of an interest rate cut in July for Canada. I think probably we're going to see what that number looks like after these reports, and so we'll get a fresh number on Monday. And so I'd expect we see a bump up in the likelihood of a cut. So I'd be watching that on Monday when we get those numbers updated. And let's see what happens as we get back into a kind of full trading week, start of a new quarter, and see what happens because I think there's some opportunities to be presented here. But generally be looking at rates, and that's getting a lot of attention right now.
Yeah, absolutely. Okay, thank you, Ben.
Thank you.
Please reach out to me if you have any questions or meeting requests. I'll be more than happy to help. Have a great weekend, everyone. Thank you.
Thank you, too. Take care.
Bye bye.